Well, good Monday morning and welcome to Connect, the California MBA's weekly podcast featuring one-on-one interviews with movers and shakers in the mortgage industry. I'm Dustin Hobbs, Communications Director here at the California MBA. And it's May. We're getting close towards the end of May, and we've been talking all month with some of the younger folks in the industry, the future of the mortgage banking industry. That's our theme for the month, and we've got a great guest today. Excited to get in the conversation with him here in just a minute. But before we do that, let's thank our sponsors at Accelerate. So if you're looking to close out more loans in 2021 and you haven't already, make sure and experience Accelerate's award-winning customer engagement platform that features lead management, CRM, call routing, sales enablement, marketing automation, borrower engagement, and data intelligence through innovative use of multi-channel marketing. That includes text, social media, email, direct mail, phone, ringless voicemail, retargeting, and much, much more. And as we always say, if you're not following Josh Friend on LinkedIn, on social media, then you're missing out. He's got a lot of great content he pushes out there, it seems like almost on a daily basis. So make sure and check him out there, follow him on LinkedIn. And if you want to schedule a personal demo, go to accelerate.com and you can do that there. So before we go any further, I do want to remind everyone that's watching and listening to this, if you haven't already checked out the new mortgageinnovators.com, I strongly encourage you, pause the video right now or the stream right now, go over and check out mortgageinnovators.com. It's a new site that the California MBA just launched here a few weeks ago at our Mortgage Innovators Conference, and it's chock full of resources for today's professional that's interested in all things mortgage innovation. We got everything from acquisition, top of the funnel efforts to closing, and post-closing efforts, and even capital markets. And we'll be constantly updating that with new resources. And if you're a player in the industry and you've got a great piece of content that you want us to consider for placement on the site, there's a way for you to do that, as well as some great sponsorship opportunities. So make sure to go right now and check it out, mortgageinnovators.com, and subscribe to us there, and you'll be up to date on all things innovation going forward. So before we get into the conversation, let's toss it over to Susan Milazzo, our CEO, for this week's weekly update. Susan.
Thanks, Dustin. Hi, this is Susan with the California MBA. And this week, I'd like to remind those of you who aren't yet a member of the California Mortgage Bankers Association that this is the last week for our membership month promotion. That's right. If you are a company that joins before May 31st this year, you will receive 2 complimentary conference registrations for either of our in-person events that are going to be happening later this summer. We've got our Western Secondary Market Conference happening at the end of August, and our Western States CREF Conference happening in the beginning of September in Las Vegas. Both of these will be in-person events. They will not be virtual, and they are highly anticipated to return to these in-person events this year. So I hope that we can see you at our events this year, and also invite you to become a member of the California Mortgage Bankers Association and become an active member with us. It's a great time to do it. Thanks, Dustin. Back to you.
All right, thanks, Susan. Now let's jump into the conversation. I'm excited to welcome in our guest this week, Ty Cieloha, Accountant Director over at Qualia. Ty, how's it going?
Great, Dustin. How are you doing?
Yeah, doing great, doing great. Thanks for joining us on the podcast today. So before we jump in, maybe for those that aren't familiar with what goes on at Qualia, I know you guys are somewhat new in the industry or in the last few years. Why don't you give us maybe the elevator pitch on what Qualia is all about?
Yeah, absolutely. So we've been in the space about 5 years now, and we started out as a system of record for title companies. And so title companies and escrow companies use Qualia just like a lender would use their LOS. And in the past several years, we have expanded our reach specifically into the mortgage lender space, and we're really trying to solve problems in how mortgage lenders are interacting with title companies, and there's still a lot of really manual processes right there. So we're trying to tighten those up with technology and really make the streamline the entire process right there.
Awesome. Yeah. Well, I love the notion of just solving problems. I think that's one of the things that has been sort of a sub theme of the podcast this month when we're talking to sort of the future leaders in the industry, and we're all about just solving problems. I mean, notice there's something in the industry that doesn't quite work well or needs some refinement. As you put it, there's a lot of manual processes still in the mortgage transaction that can be improved upon. So let's jump in the conversation here. Tell us about your background and how you got involved in the industry. What kind of led you to where you're at there at Qualia?
Yeah, so my story is a little bit interesting. I graduated college in 2007, so right after I graduated, the '08 recession happened, and I ended up getting into this space in about 2013. And so I honestly had a pretty sour taste of the mortgage industry. Just again, um, coming out of college, and you the mindset and the news all of a sudden said that this is the industry that caused the recession, and so I didn't really know what I was getting myself into. I'd been working for a startup that we literally started out of a garage, and could barely afford to live after a couple of years. So I said, hey, I need to get a corporate job. Fell into this space, and it was really interesting because after I started going on site with specifically lenders and a lot of loan officers, especially in these rural towns, I realized how great of people they are. I mean, we all know this stuff, but again, coming from somebody that was outside the industry, and people that are really trying to change people's lives and help them purchase a home, and so it had a 180 shift just on my perspective of what the industry was. Um, after several years, I was managing, partner programs on the technology side. I'd been working in point of sale that started to get a little bit commoditized, and a previous mentor of mine had said, keep an eye on the title space. That's going to be the next big thing about 4 or 5 years ago. And Qualia being, again, the system of record and the innovator and the disruptor in the title space, that really stood out to me. And the timing worked out really well as I came on board to Qualia. We were launching some new products into the mortgage lender space, which is my background, and we just hit the ground running, and it's been absolutely wonderful since.
Wow, you talk about some Nostradamus there. I mean, knowing 5 years ago that this is where all the heat was going to be in the industry right now in the closing space. I mean, it's amazing. This is where the next big breakthrough, it seems like, in mortgage lending is happening right now in the closing space. So I mean, you kind of hinted at this a little bit, but I'm just curious, what was your biggest challenge in breaking through in the industry, especially as someone, as you put it there, that didn't exactly have the most positive impression of the mortgage lending industry before you got into it?
Yeah, and I think we know that obviously things have changed a lot in the past 3 or 4 years, just with the influx of millennials and Gen Z folks get into this space. But early on in my career in this space, it was tough. Being a 20-something-year-old kid trying to, I mean, I'm sure you heard this a lot from the folks you speak with, trying to have a conversation and prove yourself to somebody that maybe double your age right there, and it's been in this industry forever. And you always got looked down on as a kid, and it was very hard, I think, to break through. Something else that was really tough for me, I think, as well is I look at things in terms of like, how do we innovate, how do we get better, and how do we change things up? And there was very much a sense of, this is how things have always been done, this is how you're going to do it. And so it caused a lot of friction internally with companies that I worked with, just trying to say, hey, let's push the bar a little bit and see if we can change things. And it was very much like, no, this is how we're doing it. I think that was really tough for me mentally earlier on in my career. And I think as I moved into more of the fintech space, they have a little bit of a different mentality where it's like, let's innovate, let's push the bar. And I think the company cultures have changed a lot too. And so that has really opened up a lot of opportunity, I think, for me, personally in my career, and been able to push through some of those earlier barriers that I had.
Yeah, no, and I can imagine it's interesting. I've been at the California MBA for 17 years, and I mean, you definitely get that sense with a lot of lenders who have been, in the business for decades, and at times in some ways it's tough to blame them. I mean, when it's been a successful model for them for decades, and help them build their companies, build their own personal financial lives, and build their retirements on this, and raise their families, send kids to college on it, and then you have someone come in and say, well, we can do this better. I mean, it's in some ways understandable. You'd say, well, this has been working good for me so far, why would you change it? But I think that you make a great point there, that the industry is now absolutely embracing innovation and seeing that, okay, well, things may have worked well before, but that doesn't necessarily guarantee that they're going to work well in the future. And even if they do, there's ways that we can improve it and make it work even better, not necessarily just for the company, but for the customer, which is our, in this case, our end user that, we should be designing a better mortgage experience for in the first place.
100%.
Yeah. So, okay. So maybe, flipping this on its head here, how is your relative youth, beard notwithstanding, which I'm sure has been a little helpful in, breaking through the youth barrier there. How has your relative youth been a benefit to you in your career so far?
Yeah, no, the beard's always a great talking point whenever I go. So it's,
Absolutely. Hey, you know, you weren't going to get through this without talking about it.
absolutely, it's one of my favorite things to talk about at conferences or anywhere right there. In terms of relative to youth, I think now, just given where I am, age-wise and in my career, I'm able to connect with people that are much more senior to me, but also on the flip side, people that are just getting into the industry, right? So, younger millennials or Gen Z, there's obviously a little bit of differences in how we communicate and how like cultural differences as well. And so I think I'm in a really good position where I can now interact with both sides of the gamut right there really easy. And I think that's a huge strength for folks that are midway throughout their careers and are able to interact with folks on both ends of the age spectrum.
Yeah, no, I think that even the C-level folks that are, maybe in their 50s or 60s or, even older, I mean, whether or not they know it or not, they need the folks in their, late 30s, early 40s who can connect, in a significant way with their younger workforce that's in their 20s. So I think you've got a good point there. So let's just take a look at what's going on at Qualia right now. I mean, obviously we talked a couple of minutes ago about how hot the closing space is right now in terms of innovation. What projects are keeping you busy at Qualia right now?
Yeah, it's been crazy the last year. It's been fun. I mean, obviously we've seen e-closing has been the focal point of the industry the last year. We're doing a lot of great things on the title sides. Again, our customers, our title customers, they're the ones actually doing the closing. So there's been a lot of great innovation just in terms of getting ready for RON and hybrid and e-closings. I think what we're really working on our team right now is back in 2015, 2016, TRID was supposed to fix a lot of things and it didn't. And it's gone back to a lot of just really manual work. It's, again, the way things have always been done. So the way that we're looking at the interaction between the mortgage lenders and the title companies is how do we solve a lot of these problems that TRID may have not fixed? Because there's still a lot of opportunities for error. There's still a lot of really manual communication and processes going back and forth. And that leaves opportunities for, again, major errors, which could cause the lender to have to buy back the loan or the investor not to accept the loan. And so, what are those things that we can shore up so that we can ensure those back-end operations really tighten up? And then ultimately, that's going to have a much better impact on the overall borrower experience because things are a little more streamlined on the back end that puts less stress on the settlement agent, the real estate agent, the borrower, and the mortgage lender right there, and just creates an overall better borrower experience, ensuring that they are going to be able to continue to hit those close dates.
So do you see the sort of the revolution in RON specifically? What impact is that having on the ground? I mean, I say this almost in a sense selfishly, coming from California, where we don't have a remote online notarization authority from the state yet. But I know it's the law of land in most of the other states in the country. So from your perspective, what's the if you're speaking to maybe a legislator in California, what's the the benefit of using RON, and what's the experience so far from your perspective in the other states where it is in place?
Yeah, it's a great question, and I think we're experiencing. I'm up in Oregon, so we're experiencing some of the same hesitancies, I think, in Oregon as California. But if you look at what RON has done, especially with COVID over the last year, it's taken everybody remote, right? All of a sudden, lenders, title companies, counties, everybody had to go remote. So the ability to still close on a loan remotely and securely has been a huge benefit right there. And you're seeing RON is taken off in Florida and a lot of these other states where you're able to still remotely execute in a RON closing right there. And often, again, if people aren't feeling safe about going out of their house, obviously things are changing with the vaccinations and the country opening up right there. But I think technology has forced us to be more innovative and sped things up. I think it's been a great benefit for this industry, especially with things like RON and e-closing. And hopefully that starts to continue to move west and be able to execute. Because at the end of the day, folks are working remotely, folks are on vacation. And so the ability to go ahead and close on their loan if somebody's sitting on, vacation in Hawaii with their family without having to be present to wet sign a document. Because e-sign technology has been around forever, right? It's the legislation that is trying to catch up right there. And it's state by state and it's county by county too, I think, which is a really difficult thing, getting every single county within a state on board in addition to the state legislation, and how things are electronically recorded, e-vaulting, and then I think investor delivery and the acceptance of e-mortgages as well by investors is something that also needs to start to change and continue to change in order for us to get to a full e-close. I think there's so many complexities in e-close, and Ron is just a piece of that that we're going to have to tackle over the next several years as well.
Interesting. Yeah, well, I think that I think you can make a good point too about with the pandemic. Hopefully, coming to a close here, the vaccination rates going up, and people starting to get back to something approaching normal. I think we're right that this whole issue of remote online notarization and e-closing, it's not going away. I mean, people are not instantly going to snap back to 2019 or earlier. I mean, even just, it's funny, I just did a transaction this last year, and I was kind of joking with my notary about it. And I said, so is it more, we were talking about remote online notarization, and I was saying, so is it more secure if we go and meet in a Starbucks and, we have all of the information out on the table, and, anybody with a cell phone walking by? I mean, just security wise, it's not secure at all. Compared to, something like this where we're talking just one-on-one over if we were doing this over a secure network through Ron. So I think that, whether it's hesitancy about security or meeting in public places, I think that is certainly going to keep Ron at the forefront, or should keep it at the forefront going forward, at least for the next several years.
Yeah, and I think you brought up a great point too that popped in my head. If you look at like data consistency and the quality of the mortgage or the quality of the loan, that's going to get better as we move to an e-close, because instead of doing a stare compare of physical documents or scanning a document into your system and then having to OCR or ADR that document, there's a lot of opportunities for error right there. But when you're looking at an e-close mortgage, everything has signature tags and signature coordinates. All the data can be analyzed in real time right there. So the quality of the mortgages is going to go up significantly, and there's going to be a lot less errors down the road for the investor post-closing.
Yeah, well, and in my mind, that gives the opportunity to close loans faster too. So I think that
100%.
benefits everyone. So if you're speaking to a lender, CEO, or someone that's looking to start a mortgage company or a company in the mortgage industry, what would you tell them as far as what do they need to keep in mind when looking to attract that younger workforce, and keeping building that sort of that younger and more hungry, more energetic workforce? What do they need to keep in mind?
Yeah, it's a great question. I think it comes down to a lot of it is culture and fit. At the end of the day, if you look at millennials and you look at Gen Zs, these younger folks, their quality of life matters a lot. I don't want to say it matters a lot more, but it's a lot more forefront in their mind. And so, yes, comp is important and title is important, but also being able to work remotely, being able to go out and do the activities that they love and have that really good work-life balance, I think is really, really important. And so having a company culture that accepts that, and then also a company culture that's very inclusive, right? Obviously, like DEI is a huge thing too, and making sure that you do have great diversity, or attempting to have great diversity within the company. So you've got folks from different backgrounds that are also creating different ideas, and that creates more innovation at the end of the day. And so I think, again, company culture, companies that really, that's why I've gravitated to the fintech space on the technology side too. It's just because the company cultures are so great there. It's almost like being in a giant family. At the end of the day, you're still required to perform and do your job, but your coworkers, or my coworkers, are people that I would hang out with. They're friends of mine outside of work, and they're not just coworkers that I spend 8 hours a day with, and that's that. I'm constantly texting them outside of work, and sharing personal stories, and being able to build those relationships. So that stuff is really important to me. I'll give a little pitch too. I'm on the advisory committee for the MBA Impact committee, or MBA Impact, which is the under 40 group for the Mortgage Bankers Associated right there. So we had a really good session at the Mortgage Technology Conference where we was a huge panel, but there were about 40 different participants there too, asking questions, and it was all professionals under 40. So I would also advise, mortgage lenders or people on the tech side too, to get engaged with Impact as well, because these are the rising stars that are, under 40, under 30, and getting feedback from them on what's really important, because that may be significantly different than what they anticipate in their minds as well, in terms of building that culture, that community, and what that younger younger group of rising stars really wants.
Yeah, that's a great pitch, and Impact is a fantastic group. So yeah, I'll certainly echo that. So maybe a follow up on that. I mean, this just sort of occurred to me as we were talking about it. Do you think that there's been a shift in, or do you think it's more of a company by company thing when it comes to, I mean, maybe 10 years ago when you talked about what happens at some of these fintech companies and Silicon Valley companies, when it comes to building the company culture, it was a lot of, well, we've got these great amenities at the office. Everything is built around making that office environment just the most fantastic. It's almost like Disneyland at the office, right? Whether or not it's all the food options, or you've got these excellent workout options, or any other, just your way the office itself is structured. So do you think now that we've sort of gone through this revolution in a lot of employers accepting and sort of embracing the work from home atmosphere, do you think that is sort of changing now, or is it just going to be maybe a company by company thing?
That's really interesting. I think it's going to be a company by company thing. Obviously, you're seeing a lot of the Silicon Valley tech companies moving remote, and it probably makes sense because they're probably paying they probably have really high overhead costs in terms of real estate and all the food and commodities they're providing for all their teams. That being said, a lot of these companies too want their folks in the office and working and contributing right there. So I personally think it's going to be a company by company thing, or we're going to see a lot of these hybrids where folks have the ability to go in the office maybe 3 days a week and then work remotely potentially for a few days a week. And I know, like within our company, just talking to a lot of coworkers, we've got a targeted date in the fall where folks are going to be able to go back in the office, and people are excited to do that because some folks they're just not wired to work from home. And they want that social interaction. They want to be back in the office, hanging out with their coworkers and innovating. And so I think it's going to be really interesting on a company by company basis. I also think the institution type obviously depends too, right? If you're a bank or a credit union, you're more likely going to have to be in branch versus if you're an independent mortgage bank, then there may be some flexibility in terms of operating out of home because you're typically out in the community. If you're in more of a retail environment or in a direct consumer environment, if you're in that may be something too where you could do from home rather than being in a call center in a office with everybody else right there.
No, yeah, I think that makes sense. I think that makes sense for sure. So let's we've got just another minute or two here. Let's close out here with sort of a fun question here. Maybe tell us one thing about you that most of your colleagues, I won't say every one of your colleagues, you don't have to tell us something that's completely a secret, but something that most of your colleagues would know about you.
Yeah, I'm like oddly ambidextrous, I guess. So I write, I eat, I do all my fine motor skills with my left hand, and then I do all my sports with my right hand. So I throw and but then I'm also weirdly ambidextrous. Like when I fly fish, I fish with either hand, or if I have a tennis racket or a racquetball racket, it's easier for me to switch hands instead of hit backhand, or ride a snowboard, both ways. And I can't explain it. It's really weird. So like on a snowboard, I can carve much better one way, and then I can shoot down the mountain much better in another way. And I can't explain it. It's just how my brain's wired, I guess.
Yeah, that's some crazy wiring there. I have to say that's whenever I've met ambidextrous people, as someone who's very much not ambidextrous. I mean, that more or less ended my my soccer career. Not really. My left foot may as well it's there for balance. The way I look at it, I have a really good right foot, but my left foot may as well just not even be there. And then having people who are ambidextrous, it's like a magic trick. I don't know really how you guys do it. So that's really interesting. Yeah. Thanks for sharing that. And thanks again, Ty, for joining the podcast today. It's been great catching up, and best of luck to you guys at Qualia, and keep us up to date on what's going on in the closing space as you guys innovate.
Yeah, Dustin, appreciate it. Thanks for your time, and also looking forward to hopefully catching up in person this fall once we get back to conferences. I'm excited for it.
Absolutely. And if you enjoyed the conversation here, make sure and subscribe to us. You can subscribe right here on our YouTube channel. You can also follow us on SoundCloud, Spotify, and Apple Podcast. And we'll be back again next week for our final episode of the month, dealing with, we're going to have a little mini panel talking with three great leaders in the mortgage industry now, and three great leaders who are going to be leaders in the future. So make sure to tune in for that next week, and we'll see you then.